Hi, good morning. Welcome back to Cape Cod Like a Local. I'm Darci Gervais with the Gervais Group, and this is Nancy Turgeon, our buyer specialist. What are we talking about today?
I want to talk about appraisals,
Okay.
part of the mortgage process. And I'm not sure that everyone understands the process and what the appraisal actually means. So I wanted to break it down today so that people really understand it.
Sounds good. I think I can start on that one. At least we'll get through the basics of why there are appraisals. So typically, as you know, if you're going to purchase a property, you're either going to be lucky enough to be paying cash entirely, or like most of us, you're going to be financing the property. So the appraisal comes into play because the lender who's loaning the money to you for the house wants to make sure that the house is worth what you've offered to pay for the property. So they send an appraiser out to take a look at the house, and they usually go in. Sometimes it's just a drive-by, but most of the time they do go in and they check the property. They look at the comps very similarly to what an agent would do if they were trying to come up with a market value. And they come back to the lender with a number. So we're going to talk right specifically about what happens when that number isn't this purchase price number, meaning the appraiser thinks the purchase price is too high and the appraised value comes in lower.
Mm-hmm. One of the first things I do when I take a buyer out is explain this process, because there's so many areas that they need to know that if it doesn't appraise, what are the options that they have? Okay. Do you want to run through the options together? And
Sure.
Okay.
Okay, so I guess the first option would be if the appraisal comes in low, you can have your agent go back to the seller's agent and see if there's some ability to renegotiate the purchase price. Mm-hmm. You know, if you've offered to pay $500 and the contract was written up for $500, but the appraisal comes in at $475, maybe the seller will be willing to reduce the purchase price to $475 because that's what the bank says the property's worth. And I think the sellers might, it certainly happens, because in a seller's mind, they're thinking, well, if this appraiser says it's worth $475, then maybe the next buyer with the next appraiser is going to think the same thing. Mm-hmm. So that's the cleanest way. If, of course, we're representing the buyers, so we love it when the buyers end up getting the property for less.
Absolutely.
So that's one way that it can be rectified.
I think it also depends on the market too, Darci. If the market if the seller has 3 or 4 other offers,
yes,
hanging in the wings, and maybe one of those is even a cash offer. Mm-hmm. Cash offer wouldn't need an appraisal, so that might be an alternative for the seller as well. But we'll get back to the buy side,
yes,
of what they need to look at.
You're right. It definitely does depend on what type of a market we're in, whether it's a buyer's market or a seller's market. Right now, I think the lenders that we've been working with have mentioned that they are seeing appraisals come in a little bit low. Mm-hmm. Okay, so then I think the second way around the situation of a low appraisal is if the buyer has the ability to bring what they call that appraisal gap amount of money into the deal by bringing, let's say, in the scenario of the purchase price of $500 and the appraisal comes in at $475, let's say that buyer is financing 80%. So the lender's only going to lend 80% of the appraised value, which means there's an extra $25,000 that needs to come into the deal. And if the buyer has those funds and can bring that to the closing table, that's one way. Another way to rectify that type of a situation. And, you might be saying, why would a buyer want to pay more than what the property's worth? Appraisals are not an exact science. It can be kind of subjective. And buyers' motivations are different for every different type of scenario you can think of. A little an amount of $25,000 to a buyer who is absolutely in love with a property that they need to get their kids moved into in order to start school.
Correct.
In September in a new neighborhood. There's so many different reasons why a buyer might go ahead and want to do that. And it depends on what their motivation is for
right.
that particular property.
Right. And hopefully when they buy a property, they love it to begin with.
Absolutely.
But, if they're moving home to family and they finally found the perfect house for them, the emotions run high for sure.
Yes.
Another option is that if they're going to stay in the home for a very long time, usually we use the rule of thumb 7 years to 10 years, they're going to appreciate over that time. So there's so many variables. It's not cookie cutter at all.
No. If let's say a buyer has a 2-year job, a brand new job that's only got, they're going to be there for 2 years before they move on to another region, let's say, that's not a situation where a buyer wants to bring any extra money into a deal that they may not get back when they sell. Mm-hmm. So that's a good point.
How about if the buyer really just doesn't want to continue with this deal? They don't have the additional funds. They just want to basically back out. Do they have that option?
Well, you can always back out of a transaction. You can. Nobody's going to force you necessarily outside of like specific performance lawsuits, which really don't happen. Nobody's going to force you to move forward. The question is, can you back out and get your deposits back? Mm-hmm. That's very important. And there are circumstances in certain markets where you, as the buyer agent, right in the offer under additional provisions, you'll put a clause in there that says property must appraise at or above purchase price. In which case, it's very clear. If the property doesn't appraise and the buyer wants to back out, they're going to back out. They're going to get their funds back.
Again, what I've noticed on that is a couple of years ago, we put that clause in all the time. Yeah. And it's one less contingency that would be called a contingency on your offer. So now we're not as quick to use that, but maybe that's a good idea that we start changing that again.
Yeah.
And putting that language in with this market change.
Yeah, I think that would probably, and honestly, it depends, deal to deal. Mm-hmm. If it's a very aggressively priced property, and there are 5 offers on, whether you add that language to the seller who's got lots of people in line behind him, he's not going to want to see that language. Yeah. He's not going to care if it appraises or not. And maybe the next buyer won't either. Yeah. So it really is deal by deal. That's why having a dedicated buyer agent working with you to help you through these types of scenarios is really key. Mm-hmm. The other part about not moving forward with the transaction is usually once you're up, you've made the offer, you've had it accepted, you've had your home inspection, you've signed a purchase and sales agreement. Mm-hmm. That's typically when the lender sends out the appraiser. Mm-hmm. So you're you're 3/4 of the way through the process at this point. Now, the only contingency a buyer would have left typically is the financing contingency. So if the buyer can't get financing on the property because the lender denies the loan, then the buyer can get their deposits back. However, let's say that the buyer is financing 80%. Okay? Mm-hmm. That's a comfortable loan. That's a conventional, comfortable loan for a lender. There's a lot of money built in there in case something goes wrong. They might, if the appraisal comes in $10,000 lower, they might say, you know what, that's okay, not a problem. We'll still lend you the 80% of the lower price. Mm-hmm. Now, unless the lender actually denies the loan and issues a denial letter, then you can't use the mortgage contingency as a way to get your deposits back. It has to be a denial letter from the lender. So this comes into play where we try to talk about this a lot more seriously with buyers who are putting a significant amount of money down. If we're working with a buyer who's only putting 3.5% down with an FHA loan, say, and the appraisal comes in low, there's no question that they're going to get a denial letter because the bank is not going to go through with that loan. So the loan will be denied, the buyer will get the deposits back, no questions asked.
Same thing with the VA.
Same thing with, absolutely, VA is 100% financing. So if that property doesn't appraise, that loan doesn't get written, period. Okay. So when the buyers are putting additional, a good amount, 20, 25% down, that's when they need to understand that this scenario could come up. And do you have extra money to put into the deal if it does come up? And, just to make them aware that that's something that can happen.
I hope that it cleared up some questions today that you might have with an appraisal coming in lower than the purchase price. Also remember, you always have a team. You have a buyer specialist. Most times you have a transaction coordinator, your lender, the attorney. All of these people work very, very closely to make sure that everything is moving forward and that it's a really positive experience for you. So for now, see you next time on Cape Cod Like a Local. Bye.